Hello everyone and welcome back. This is a lesson on CRT, as promised, candle range theory. This is not going to be something for you guys looking for some type of holy grail or some spoon-fed type of garbage. This is going to be an in-depth guide for the ones who want to learn more, the ones who are dedicated. Literally everything you need to know about CRT will be in this video. Now, if you want to learn more, I suggest heading over to Romeo's channel or Sham. Let's get into it. The CRT concept itself, the theory itself, is what helped me design my 9 a.m. CR model. So I've been getting a lot of comments telling me, you're just preaching what Romeo states and what he says and teaches. I am not. The 9 a.m. CR model is based around the power of 3 and CRT, as well as the open, high, low, and close. However, it is a specific model designed on time. This right here is a CRT. We have the first candle forming the range, the high and the low. The second candle manipulating below, wicking turtle soup. And the third candle distributing higher, where? To the range high. So what is CRT? CRT stands for candle range theory. CRT usually presents as a 3-candle model, but it's not always going to be a 3-candle model. Usually it will be, but it won't always be. It's not restricted to 3 candles. All right? For example, right here you can see multiple candles used in order to hit the range high. So we formed a range inside bar, turtle soup the low, heading all the way to the high of the range. As I say right here, there's 2 types of CRT models that can form. The 3-candle model, which everybody is used to. If you're not, please watch my previous videos. And a newer model, CRT plus inside bar. This is a lot more high probability. So if you're looking for high probability setups and you want to skip and filter out everything else, focus on the CRT plus inside bar setups. What's a CRT plus inside bar? As I explained before, this setup right here. All this means is that there's more than 3 candles in order for one end of the range to be hit and the other end of the range to be hit. Multiple candles will form inside of the CRT range. What is the range, guys? The range is the first candle. And what's the difference between a CRT plus inside bar and a 3-candle CRT? The difference is it takes longer to form. As I said before, it's higher probability and better for people who wait for confirmation, or better suitable for beginners. Here are a bunch of examples of CRT. I've been getting a lot of comments in my previous videos of how I should include more examples. Right here you can see range formed, turtle soup, heading all the way to the opposing end of the range. Same thing happened here. Turtle soup, heading to opposing end of range. Same thing. Range formed, inside bar. So this is a CRT plus inside bar. Turtle soup the low, heading all the way towards the opposing end of the range. Here is a perfect 3-candle model. Range formed, accumulation, manipulation, distribution, power of 3. Same thing happened in this one. We formed a range, inside bar, turtle soup. Where are we heading? The opposing end of the range. It's pretty straightforward, pretty simple. This is going to change everything in your trading. Everything changes from here on out. CRT is mechanical. It's a signature in the code. The code of what? The code of the markets. So ICT teaches us to understand that there is an algorithm controlling these markets. Every single algorithm has a code. Within that code, you can look for specific signatures that repeat. And this is exactly what CRT is. It is a mechanical signature within the algorithm's code. The highs and lows are mechanical. They are all predetermined. Of every single week, every month, every week, every day. Every candlestick's high and low is predetermined. There will always be a predetermined high and low and a predetermined objective, always a fixed objective. You can combine CRT with any concepts. All concepts can be combined with CRT. However, using the power of 3 and turtle soup will give the highest probable trades. Always. Here's an example of CRT on the lower time frame. Right here, we have the range low and range high. Turtle soup the range low, breaking above, forming an order block. We close above the order block. That is the change in state of delivery, the CSD. This is our entry point. Coming up, partials taken at the midpoint of the range always. Why? Because the midpoint of the range, or EQ of the range, is where reversals or continuations can happen. Turtle soups are highly probable at the EQ of the range. Write that down. If you only focus on taking trades targeting the midpoint of the range, your win rate will be a lot higher. As you can see right here, we hit the midpoint of the range. We came all the way back down. OTE entry, hit the order block once again, heading all the way to the opposing end of the range. This right here was a 7.4 RR trade. This is what CRT allows you to do. So, just a reminder, this lesson is going to sound very repetitive, especially if you've watched my previous videos on the 9 a.m. CR model, which is primarily based on CRT. So, you guys need to stay with me here. There's going to be a lot more released in this video. The concepts were lightly touched upon in the previous videos, but there's a lot more to share. Keep in mind that the repetition is what creates the strongest traders. Repeating, practicing, studying, backtesting, front testing, this is what's going to define you as a trader. This is going to be what separates you from the beginners to the professionals. Right here, we have a CRT high and low. The high and low of this candlestick right here. We souped the range low. Pause the video and tell me what's going to happen next. For all of you who did not pause the video, you guys are doing yourself the wrong. You need to listen and focus. Pause the video and tell me what will happen next. All right. Clearly, this was a turtle soup. So what happens with a 3-candle CRT? We form the range high and low, we turtle soup a low, and we hit the range high with the 3rd candle. If we do not close below a candlestick, this is bullish. If we wick below a low, bullish. Candles are ranges. Every single candle is a range on every single time frame, whether it be the monthly, the weekly, the daily, the 4 hour, the 1 hour, 15 minute, 1 minute. Every single candle is a range. Time is fractal. You need to understand that a daily chart is a higher time frame for a 4 hour. A 4 hour is a higher time frame for the 1 hour and 15 minute. A 1 minute is a higher time frame for the seconds chart. Time is fractal. Therefore, every single timed range is fractal as well. Every single candle is a range. Ranges can either be turtle souped or broken and retested. Every candle has a high and low. So open, high, low, and close, or open, low, high, and close. This means on a lower time frame, you will have a range, a specific timed range. This is very important. Some candles are more high probability than others. These are the specific times of day that you need to be looking for. To determine the higher time frame bias, look to see if a higher time frame candle has been turtle souped or not. This is the key to bias. Do not force it. It'll be very obvious when it's time to enter. So, for example, right here, we wicked above the candle's high. This is bearish. We did not close. Same thing here, wick below, bullish. We did not close. Same thing here, wick below, bullish. This is the most important thing to understand. A close above a candle's high is bullish. A wick above a candle's high is bearish. Vice versa if you're bullish. So a wick below a candle's low is bullish, and a close below a candle's low is bearish. The power of three, also known as AMD, accumulation, manipulation, distribution. The power of three represents 3 stages of price delivery. Once again, accumulation, manipulation, and distribution. Each stage has its own specific function, as I just mentioned before. Use the power of 3 to your advantage by combining it with the previous knowledge of candles are ranges. What does this mean? There's 3 candles in a 3-candle CRT. That means one candle is accumulation, another candle is manipulation, and the third candle is going to be distribution, the highest probable trades. The power of 3 occurs in every single candle as time is fractal in nature. There's going to be a range in every single candle. This is crucial to understand. This is a prime example of the power of 3. We accumulate. What are we accumulating? Sell side and buy side liquidity. Sweep sell side liquidity, hitting a key level, manipulating, turtle soup, and distributing higher. So here's another example. We form a range high and low. We wick above the high. What's going to happen next? Pause the video and tell me what's going to happen next. So, let's review this. The first candle drew the range, accumulation. Second candle wicked above the high, bearish. We wicked above, we did not close above. Turtle soup, manipulation. Third candle must be distribution. Distributing where? To the opposing end of the range. So let's look at that example on the lower time frame. This is candle 1, the gray shaded region. Candle 2 is the red shaded region. And now where would be the entry? Focus. First off, we're bearish. There's your hint. We souped the range high. Where's your entry short? Here is the order block that forms. How did it form? How is it validated? If we close below. So with this candle right here, we closed below the order block. We reached into the order block. Once again, this is your entry, and you're shorting to where the midpoint of the range and then the opposing end. Third candle, distribution. If you're trading the third candle only, the third candle opens, rises above, entry above, third candles open within the order block, and short. Turtle soup and change in state of delivery. A candle can either be broken out of or it can be wicked. A wick above is bearish, a wick below is bullish. A close above is bullish and a close below is bearish. Sometimes you're going to see candle number 1 and then multiple inside bars. Eventually, one end of the range will be souped or even broken, but the soup is more likely to occur if an inside bar forms. If bullish, we wait for the next candles open and then we manipulate below into a higher time frame PD array or a key level. This is the turtle soup. The key level is from the higher time frame of a specific power of 3 that you are trying to capture. Vice versa when bearish. If you are bearish after a candle has been souped, the third candle is what you should focus on. When the third candle opens, you must look for a sell opportunity above its opening price. Vice versa when bullish. So when you're bullish, your entry model must be below the open. The change in state of delivery, CSD. This is basically key to mastering the order block entry. If you want to master turtle soup without entering on the turtle soup, use the change in state of delivery. The last up close candle in a bullish leg turning bearish and the last down close candle in a bearish leg turning bullish is the change in state of delivery. These are key factors to if your turtle soup will end up working out or not. For example, a thick, heavy down close candle tapping a key level. As soon as we close above it, we should now remain above it. This will be your order block as well as your change in state of delivery. So look what happened. We closed above. You could have entered. We rallied. We came back down. You could have entered once again. And we rallied again. Stop loss where? The bottom of the order block or the swing low. Once again, turtle soup, key level hit. Thick up close candle, bearish order block. We closed below. That's the change in state of delivery. Tapping the order block again. Entry short. Bang. So remember, the last down close candle is going to be your change in state of delivery when bullish. Thick and heavy down close candle, and vice versa when bullish. When looking for a bearish order block. There's two types of CRT, the 3 candle CRT and the CRT plus inside bar. So, a lot of you guys may be confused. What is a CRT range and what is a typical range? So a CRT should be very, very obvious. It should not be hard to spot. For example, right here on the left, you're going to see a typical range. No true CRTs are forming in this range, as you can clearly see. On the right, for example, we have a CRT range. Thick candle forming, the range, inside bar, turtle souping the low, heading all the way to the CRT high. Guys, this is an inside CRT. So there's a CRT and a CRT within the CRT. Pay attention to that. More examples for you guys. Typical ranges, no CRTs available. Typical range, no CRT. And then CRTs. So we form a range high and low. Turtle soup the high, targeting the range low. This example, we form a range high and low. We turtle soup the low. We wicked below. So this is bullish, targeting the opposing end of the range. Same thing here. Formed a range high and low. Turtle souping the low. Bullish, targeting the opposing end of the range. So do you guys see how the CRT ranges are very, very easy to see compared to a typical range? Focus on trading CRT ranges. Filter out your trades. So as I said, there was two types of CRT, a 3 candle and an inside bar plus CRT. The 3 candle CRT, as many of you are familiar with, is simply 3 candles: accumulation, manipulation, distribution. Power of 3 at its finest. The first candle is going to form the range. We wait for the close. Mark out the high and the low. This is a specific timed range, not random, a specific time of day. A second candle will form, souping or breaking the high. This is a turtle soup. This is going to be where you're going to find the most advanced entries. On the third candle, we're going to see the quickest and highest probability trades. This is the distribution leg. So this is going to be where the beginners should focus. It's going to be a quick, fast, and heavy price action filled candle. When you're bearish, you want to sell above the third candle's open. Look for your entry models above the open of the third candle if you're bearish. And if you're bullish, you want to buy below the open of the third candle. Look for all your entries below the third candle's open if you're bullish. Here's an example of that CRT on a lower time frame. First candle forms. Second candle forms, souping the first candle's range high. Third candle forms, order block right here, thick up close candle, touching the key level. Change in state of delivery. Third candle open, above the high of the third candle. When we're bearish, we want to look for entry models. Order block is above the third candle's open. Sell in here, short to the opposing end of the range. For those of you who follow ICT, this is a unicorn entry. Those of you looking for OTE, as you can see, we hit the order block as soon as we closed below. So we closed below the order block, we tapped in it right here. This is your order block entry, and the ones looking for OTE would enter right here. Where are you targeting? The opposing end of the range. How funny is it that the fib, one of the first deviation of the Fibonacci, aligns perfectly with the CRT low? It must be random. Hopping on to the 1 hour time frame. We can now refine the entry by looking for a lower time frame CRT. The CRT low and CRT high of the higher time frame is coming from the 4 hour. We drop down to the 1 hour and look for our lower time frame CRT, which is performing right here. Hopping down to the 15-minute time frame, deeper look. Let's refine that entry. Candle open. Turtle souping the low. When we're bullish, we want to buy below the open. So what open is this? This is the candle right after the one that hit the key level on the 4-hour time frame. So as you can see right here, we hit the key level, range low, open of this candle. That is this shaded region right here. Since we are bullish, as we wicked below the range low, we want to be buying below this range low, which just so happens to be aligned with the lower time frame CRT, which is exactly where this turtle soup takes place. Entry long, targeting the opposing end of the CRT range. Let's dive down to a 5-minute chart. The candle opens. We soup the range low on the 1-hour time frame. Sorry, we soup the 1-hour range low on the 5-minute chart. We wait for the candle to open, as mentioned before. Buy below the open, entry long. Targeting where? The opposing end of the higher time frame range. Of course, take your partials at the equilibrium. If you study this the way you are intended to, all you will ever need is 3 candles. This is the turning point in your entire trading career. There are specific candles that you need to focus on. We must understand which candles to pick. Which candles will have the highest probability. It is not random. You do not go on your chart and choose any random candle and trade CRT with any random candle range. No. Define the range that you want to trade. Are you a swing trader, day trader, scalper? What range do you want to trade? A monthly chart, so a monthly range, a weekly range, a daily range, a 4-hour range, a 1-hour range, etc. Time is fractal. Choose a range. Whatever range you want to trade, you must be looking for the power of 3. There is always an open, high, low, and close, or open, low, high, and close on every single candle. This means that the power of 3 will always be there. When people are trading profitably, not using the power of 3, they are basically using the power of 3 without knowing it. So looking deeper, if you're going to use the monthly range, focus on the 4-hour chart. If you're going to use the weekly range, focus on the 1-hour. If you're going to use the daily range, focus on the 15-minute. If you're going to use the 4-hour, focus on the 5-minute. If you're going to use the 1-hour, focus on the 1-minute. And if you'll use the 15-minute, use the 15-second. I do not recommend. This is not for entries. This is simply for looking for the power of 3. Accumulation, manipulation, and distribution. So here's a perfect example of the open, high, low, and close, or open, low, high, and close theory. In every single candle, there's an open, low, high, and close, meaning there will always be accumulation, manipulation, distribution. Price opens, we accumulate. Low, manipulation, distribution, high, and close. Same thing when we're bearish. Open, accumulation, high, manipulation, distribution, low, and close. There is always a power of 3 within the open, high, low, and close, within a candle. Always. Understanding this will unlock the markets. This is a daily candle. This is a 4-hour candle. This is a 1-hour candle. This is your missing link. Every candle has a function. As mentioned before, price will always open, turtle soup, and then decline when bearish, vice versa when you're bullish. Candle 1 will always be accumulation. Candle 2 will always be manipulation. Candle 3 will always be distribution. The manipulation stage will always have the most advanced entries. This is where turtle soup occurs. The third candle, distribution, will always have the most optimal trade entries, most suitable for beginners. Blend the candles of CRT with the times of the formation of the high of the day as well as the low of the day, high of the week, low of the week, high of the month, low of the month, high of the year, low of the year, and you'll get an accurate read on the markets. This is important. Go backtest, pause the video, backtest, backtest, backtest. Look for the specific times of the formations of highs of days and low of days. This is where you want to be looking for your CRT. If entering on candle 3, it will likely be a very, very fast, quick, and heavy trade. Why? Because it is the distribution leg of the model. Remember, always take partials at the 50% of the range. As I mentioned before, reversals tend to happen at this point here. If you are confused about the direction, ask yourself who is getting screwed over. Retail buy above highs and sell below lows. You do not want to be selling when we are below a low. So when we are below a CRT low, you do not want to be selling. You want to be buying. When we are above a CRT high, you do not want to be buying. You want to be selling. The program. When we are bullish, there will be a turtle soup, a rally, dump the rally very close to the turtle soup low. This is the failure swing low. So what you're going to see price do is turtle soup, a key level, rally for a bit, dump back down near the low that was just formed, and then rally back up. When bearish, we'll see the same thing happen. Turtle soup, dump, rally, the dump very close to the turtle soup high. This is the failure swing high. Every single turtle soup will have this specific swing high, failure swing high. This is going to scare more people out of the market. Keep in mind that for the above statement to be correct, the turtle soup low must be created at a very specific time on your chart. This is not random. Let's look at these examples right here. We have a turtle soup, key level hit, rally, dump close to the swing low that was created with the turtle soup. This is scaring more people out, distributing higher. Same thing here. Turtle soup, the CRT low as well as the key level. Important, we hit a key level. Failure swing low. And then distributing where to the opposing end of the CRT range and then higher. Recognize how in both examples we hit a key level. That is why we have a failure swing that performed right after. So let's look at entries. How do we enter off of the CRT? So the entry on the second candle is the turtle soup. That is your first and most advanced entry. The second entry will be the order block or change in state of delivery. And the third entry will be the market structure shift, then a breaker or an optimal trade entry. What I want you to focus on is the order block. So entry number 2. The key is to only trade the order block when the down close or up close, whichever type of order block it is, whenever the candle that purges liquidity is thick and heavy, as that is what fools the most people to enter in the wrong direction. So if we soup a CRT low and we form an order block that is thick and heavy, meaning it is a thick and heavy, large down close candle, that fooled people to be bearish. That is a high probability order block that you want to be entering long off of. Vice versa when bearish. This is basically how we validate our order blocks. Never enter an order block that is small, petite, short in nature. Candle number 3 in a CRT will provide an entry model based on model 1, which is the order block, plus a turtle soup. This is going to be a very fast trade. OTE can also be found within this candle if we have a 3 candle CRT. The final key to CRT is understanding the key times where highs and lows will form. There are key times throughout the day where there is a high probability of highs and lows forming. Find these times. Every high and low of every single candle is timed. Every single one of them. The market will consolidate at specific times, and the market will expand at certain times. It is not random. Study the charts. And guys, focus on one or two at max, 2 asset classes at max. Focus on them. Study them. Memorize the charts. Here's a little hint. Little cookie for you guys. Candle number 1 is accumulation, candle number 2 is manipulation, and candle number 3 is fast. You basically want to get as many candle number 3s as you possibly can. Forget about candle 2. Focus on candle 3 and focus on getting as many candle 3s as you possibly can. Do not force any turtle soup. It's always going to be there. If you force the turtle soup, it means you should have not entered the trade. And I hope you're writing that down in your journal. The turtle soups that you should be taking are going to be visible, clear, unarguable. Do not force anything else. Here are some more examples. We have a range high and low. We turtle soup the high, wick above, no close. This is a wick, so we are bearish. Where are we going? The opposing end of the range, the CRT low. Remember, this is applicable on every single time frame. However, the highest probable CRT ranges will form at specific times of day. So let's look at the lower time frame. Candle 1 is Monday, candle 2 is Tuesday, candle 3 is Wednesday. Of course, the shaded regions present the higher time frame. We are on the lower time frame. Candle 1 forms the range, Monday range, Tuesday manipulation, and Wednesday distribution, power of 3. Range high, range low. Turtle soup, the range high. Change in state of delivery. Breaker formed. Breaker hit. Short, targeting the opposing end of the range. If you want to enter on the third candle, you wait for the third candle to open. You would see that we souped the CRT high with the second candle, which is Tuesday. Third candle open, Wednesday open. Wait for price to move back above Wednesday's open. Short, targeting the CRT low. As you can see, turtle soup. This right here is a model in itself. This is the Monday range model. I'm not going to speak more about it. But for those of you who understand, this is a very, very, very high probable model. Using the Monday as your range, Tuesday as manipulation, and Wednesday as distribution, you'll be able to catch a lot of trades and make a lot of money. Let's look deeper into candle number 3. As I mentioned before, there was a turtle soup. The quickest trades are within candle 3. The bias is bearish because we souped the range high, closing below the range high, wicking above the range high. Bearish. Our goal is to wait for price to reach above the third candle's open. Turtle soup where? We turtle souped at the midpoint of Tuesday's range. This is key. Not many people will tell you this. This is key. Look for your turtle soups, look for your entries on the third candle at the midpoint of the second candle in a CRT range. So, little summary. First candle formed the range, second candle manipulated, order block formed, change in state of delivery, broke structure, breaker formed, tapped into a breaker, short, third candle open, moved back above the third candle's open, where to the midpoint of Tuesday's range, turtle souping at the midpoint of Tuesday's range. Remember when I said turtle soups happen and reversals will happen at midpoints of range. Reversing back down to the CRT low. This is an A+ model, A+ setup. This is what you need to study. Rewind this and rewatch this as many times as you possibly need. I'll repeat, you must always look for the turtle soup at the equilibrium of the second candle in the range, above the third candle's open. Your first entry could be the turtle soup, and the second entry would be the order block. Close below, tapping back into it, short, targeting the opposing end of the range low. Here's another example. 3 candles, range formed, high and low. Wick above, bearish. Third candle, distribute. Lower time frame. First candle formed the range high and low. Second candle, souping the range high. Order block formed, close below CSD. Tapping the order block short, targeting the opposing end of the range. There are specific confirmations to be looking for when trying to spot the highest probable CRT. These are the specific confirmations. A timed CRT range. This means that the CRT must form at a specific time. A timed turtle soup. This means that the purge of liquidity, the sweep of liquidity, the turtle soup, whatever you want to call it, must happen at a specific time. A high time frame key level. If you have a high time frame key level within CRT or below or above CRT, it will make it more high probable. CRT plus inside bars, as I mentioned in the beginning of this video, this automatically represents a high probability setup. And lastly but not least, the lower time frame CRT within a higher time frame CRT. So all of these are basically confirmations to be used with CRT in order to decide whether or not your CRT range is high probability or not. Not all of these need to form in one trade setup. Use 3 or 4 and you'll have high probability models. So let's look at the higher time frame key levels. Using a higher time frame key level to validate the CRT high and low will raise your win rate. When looking for your CRT range, spot the higher time frame key levels below or above the CRT high and the CRT low. Let me help you guys on finding the key levels. Your key levels will always come from the higher time frame, not any random higher time frame. A lot of traders may be getting confused here. If you're on a 1 hour chart, you're not going to be looking for a level coming from the monthly chart. For example, here is the key. When you want to find your higher time frame key levels, remember the division by 4 rule. Divide by 4. What does this mean? If you have a higher time frame key level coming from the 1 hour, your CRT will form on the 15 minute. So let's reverse it. If you have a CRT forming on the 15 minute, your key level will come from the 1 hour. 15 times 4, or 1 hour divided by 4, is 15 minutes. You can also use the 4 hour. If you're looking at a CRT on the 1 hour, the key level will come from the 4 hour or the daily. If you're on a 4 hour time frame and you're looking at a CRT range, the key level will come from a daily chart or a weekly. If you're on the daily chart and you're looking at a CRT range, the key level will come from a weekly chart or a monthly. If you're on the weekly chart looking at a CRT range, the key level will come from a monthly chart or a yearly. We want to see explosive movement when key levels are hit. We do not want to see price quote unquote chilling at key levels. Remember, divide by 4. If you ever forget this, just keep in mind divide by 4. If you're on a monthly chart, the month divided by 4 is weekly because there's 4 weeks in a month. If you're on a weekly chart, key level divided by 4, daily. If you're on the daily, divided by 4, 4 hour. If you're on the 4 hour, divided by 4, 1 hour. 1 hour divided by 4, 15 minutes. Here's a perfect example. So this example entails a higher time frame key level within the lower time frame CRT. Not below, not above, but within. Understand this. This is a 15-minute chart. The key level is coming from an hourly chart. CRT high, CRT low, key level hit, range formed. We soup the range low, coming back above the key level, exploding above. As soon as price closed above the key level, price expanded above with speed, targeting the CRT high. This key level right here within the lower time frame CRT makes this CRT very high probable. Longs over here would have been amazing. So as I mentioned before, the key level came from the 1 hour chart. We turtle soup the low, heading higher. This is the 15-minute chart. Zooming in, as we can see, the CRT high and low, key level within the lower time frame CRT. Turtle soup, wick below, bullish, entry long, towards the opposing end of the range. Remember the rule, divide by 4. If the higher time frame key level is coming from the 1 hour chart, the CRT will be on the 15-minute. Let's look for the entry. Now we're on the 1 minute. Why are we on the 1 minute? Because the CRT formed on the 15-minute chart. So if you see a CRT form on a 15-minute chart, you want to use the 1 minute chart for your entries. This right here is sauce. This is basically going to help you align your charts to enter your trades properly. Right here you can see a purge of the a purge of the CRT low. As soon as we closed above, that is the change in state of delivery. This is the validation of the order block. Why is this an order block? A thick down close candle touching the key level number 1 and tapping the CRT low. Close above, entry on the tap, long towards the opposing end of the CRT range. Very high R to R trade. So now let's take a look at an example of a CRT with a higher time frame key level below or above the CRT. So as you can see right here, we have the CRT coming from the 1 hour. The key level will come from a 4 hour chart. Key level below the CRT low. As soon as we soup the CRT low, we're going to hit that key level. This represents a high probability trade. Then we target the opposing end of the 1 hour range. So as I mentioned before, if the CRT is on the 1 hour, the key level is going to come from the 4 hour chart. Having a key level below or above or within your CRT from a lower time frame is key to achieving a high amount of success with CRT. This is what presents high probability CRT setups. They are not random. If your CRTs are not working when you're trying to execute, it is because you are not using key levels. So let's look down to the 5-minute chart for entries. Why? Because the CRT comes from the 1 hour. So if your CRT range is on the 1 hour chart, we're going to use the 5-minute chart for our entries. Write this down. Order block formed. How is this an order block? A thick down close candle tapping the CRT low as well as the key level turtle soup. Close above the order block, change in state of delivery, tapping back into the order block, entry, long targeting where the 50% of the range as well as the opposing end. Using key levels will help you determine where the specific lows of the turtle soups will form. Let's hop on to another confirmation technique. A lower time frame CRT within a higher time frame CRT. A lower time frame CRT within a higher time frame CRT represents a high probability trading scenario. Head over to a higher time frame, the 4 hour, for example, and draw out your CRT, the high and the low. Wait for one end of the range to be hit. Head on to your lower time frame, the 1 hour, divide by 4, and draw the CRT on the candle that hit the higher time frame CRH, or CRL. I'm going to show you an example of this, don't worry. This exact setup is what's going to form the important highs and lows. This is an important signature in price action that will reveal a lot to you. Right here, for example, we have a key level. We have a 4-hour CRT. The 4-hour is right here we have the example. Lower time frame CRT within a higher time frame CRT. Key level, 4-hour chart. This is our higher time frame. CRT high, CRT low. CRT low was hit. Dropping to the lower time frame, as we can see, the CRT low and high of the 1 hour was also respected. Where was this CRT formed? The 1 hour CRT was formed within the 4-hour CRT. This is key. So as you can see here, this is the 1-hour chart. The 1-hour CR high, so as you can see, this is the 1-hour chart. The 1-hour CRT high and low formed within the 4-hour CRT high and low. This is very, very important. Understanding this will help you determine key highs and lows. For example, price continued on to rally for a while over here. This is over 150 points in the Nasdaq. Become familiar with this setup. Lower time frame CRT within a higher time frame CRT. This is the key level. Important. This is very important. A lot of you guys have probably been waiting for this part. CRT and entries. If your CRT is performing on the monthly chart, so if you're looking for your CRT ranges on the monthly, your entries must come from a daily chart. If your CRT is from a daily chart, your entries must come from a 1-hour chart. If your CRT is coming from a 4-hour chart, the entries must come from the 15-minute. If the CRT is forming on the 1 hour, your entries will happen on the 5-minute or 1 minute. And if you're using the 15-minute to draw out your CRTs, your entries will perform on the 1 minute. Understanding this is key. You cannot be drawing CRTs on the 4-hour and executing on the 1 minute. That is how you will lose. Align yourself properly and you'll succeed much quicker. So let's look at some high probability CRTs. For Forex, the magic numbers are 159. For futures, the magic numbers are 2, 6, 10. 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m. For futures, it's 2 a.m., 6 a.m., 10 a.m., 2 p.m., 6 p.m., 10 p.m. These are specific times on the 4-hour chart in which you want to be looking for CRT ranges. For Forex, the first week, Monday and Friday, And once again, 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m. Example right here. Monday performed the CRT, high probability CRT as mentioned here. Turtle soup Tuesday, distribution Wednesday. Friday also has a high probability CRT range. For futures, we use the first week of the month for a CRT range, the Monday or the Wednesday. Same thing, 2 a.m., 6 a.m., 10 a.m., 2 p.m., 6 p.m., 10 p.m. If you guys study this enough, this is all you will ever need. So now, since we know the high probability CRTs and what times and what days they form, we must now learn where the high probability turtle soups, the high probability purges will come. What times? The turtle soup needs to form at a specific time in order to be considered high probability. If the turtle soup doesn't happen at the correct time, you don't execute. Let's say you're looking for a turtle soup at 3 a.m., but the turtle soup happens at 2 a.m. You do not enter. You wait for the next setup. Simple. Filter your trades. Look for turtle soups at 3 a.m., 6 a.m., and 9 a.m. Remember when I told you guys 3, 6, 9. One more that you could be looking for is 1 a.m. There's a lot more high probability CRTs and turtle soups as well. Go back test, you'll find them, trust me. But for now, I'll leave you with 3 a.m., 6 a.m., 9 a.m., and 1 a.m. This means your CRT ranges, as mentioned before, can form at 2 a.m. and a turtle soup can form at 3 a.m. So, let's align your CRTs with the turtle soups. The CRT range will form on the week 1 of the month, and the turtle soup will occur on week 2. CRT range will form on Monday, and the turtle soup will form on Tuesday or Wednesday. Why or Wednesday? Because Tuesday can be an inside bar. Wednesday can be the turtle soup. High probability CRT. Let's say the CRT forms on Friday. The turtle soup will occur on Monday. If the CRT forms at 5 p.m. on the 4 hour, the turtle soup will form at 3 a.m. If the CRT forms at 9 p.m. on the 4 hour, the turtle soup will occur at 1 a.m. or 3 a.m. If the CRT is forming at 5 a.m. on the 4 hour, the turtle soup will occur at 9 a.m. This right here, actually this entire slide, is enough information to make you a successful trader. Not many people are going to be revealing this type of information to YouTube, to Twitter, to anywhere for that matter. This is what is controlling the markets. Study. So let's look at an example for Forex. CRT formed at 5 p.m. As mentioned, where is the turtle soup going to perform if we formed a CRT at 5 p.m.? At 3 a.m. As you can see, 3 a.m. turtle soup. This is a 4-hour time frame. So 3 a.m. turtle soup distributing to the opposing end of the range. If we go back, you can see 5 p.m. 4-hour CRT, 3 a.m. turtle soup. Exactly what happened here. Let's take a look at a futures example. On a 4-hour chart, you can see at 10 p.m. we formed the CRT range, and at 1 a.m. we turtle souped, then distributing to the opposing end of the range. As I mentioned before, futures, you want to be paying attention to 2, 6, and 10 on the 4-hour time frame. 10 p.m. CRT, and 369 plus 1, 4 turtle soups. CRT at 10, turtle soup at 1. Seems like magic, right? Another example here on Forex. 5 a.m. formed the 5 a.m. formed the CRT range, high and low. 9 a.m. turtle soup. And the third candle distributing to the range low. This is a 3-candle CRT. Perfection right here. As mentioned before, if the CRT forms at 5 a.m., the turtle soup will form at 9 a.m. Study that. Rewind and re-listen to exactly what I just said. The filter approach. We're getting close to the end of the video here. And I felt as if it was necessary to add a little bit of psychology to this video. Strategy, models, code, signatures, that's all one part of trading. Psychology, psychology, my friends, that is what's going to distinguish you from the beginners. Let's look at something I call the filter approach. Allow yourself to have filters on your trades. Filter out the low probability trades as they are a waste of your time and energy. Save the capital for high probability trades only. This is what separates the beginners from the professionals. This might seem like common sense, but for some reason, beginners will always fall victim. Let's take an example, as you may not understand what I mean. If you have backtested and studied properly, and while backtesting you recognize a specific signature in price that you can always spot clearly, visibly, it's always there, and you just naturally like it better. Let's call this your A+ setup, right? That is what the retail community tends to call it. Well, here's a secret. Those retail traders don't understand that that specific A+ setup is the only setup they should be executing on. It's not an A+ setup, it's simply the setup. Many retailers would succeed a lot more if they simply understood this. So let me simplify. When you're backtesting, you're going to see some setups form. Higher probability setups or A+ setups, and you'll find some lower probability ones as well. You're going to execute the A+ setups and the B+, C+, etc. setups. Why? Because you categorized the best setup as your A+ setup. Rather, you should be categorizing that A+ setup as your only setup, as the setup. The only setup that you should be executing on is the one that you can spot clearly. The highest probability setups are the only ones that you should be executing on. Filter everything else out. Filter everything that is not a plus in your eyes out. Do not take anything else. If there is a specific way that you like your CRTs to form, wait for those CRTs. Don't force any others. There's always going to be more. For example, if you like inside bar CRTs, then don't trade the 3-candle ones. It's simple. Many traders will fall victim to their impulses, gut feelings, etc. They will find any way possible to come up with a reason as to why an entry is a good idea when there is nothing on the chart. Sound familiar? This is another common characteristic between the professionals and beginners. Separate yourself from the rest. Be sure to focus on your risk to reward and percent gain loss. This is very important. Very, very, very important. I haven't touched base on this yet. However, if I get enough comments, I will. It's very boring, but very, very important. Without the proper R to R, you'll never succeed with CRT. Set a standard for yourself. Whether it be 2-to-1, 3-to-1, 1-to-1, 5-to-1, whatever it may be. Set a standard for yourself. If you only want to take 3-to-1 trades, 3R trades, only take 3R trades. Do not settle for a 2R trade. If a 2R trade is there, don't take it. Wait for a 3R trade to form. And if it doesn't form today, wait for tomorrow. If it doesn't form tomorrow, wait for the next day, etc., etc. Be patient. That concludes CRT. Everything that you need to know about CRT is within this video. This is a lot of information. I don't expect you to watch this in one go. Take your time and allow your brain to absorb the knowledge. If you don't allow yourself to absorb, you will never retain anything. Take your time, steady pace, get to the charts, backtest, and study. Part 3 of the 9 a.m. CR model is also releasing soon. I appreciate all the love and support, guys. And with that being said, good luck, traders. I'll see you next week.